I'm Max von Holweg, the chair of the Joint Audit Committee of the New York City Municipal Water Finance Authority and the New York City Water Board. I'd like to call this meeting to order and ask Deb to call the roll, please.
Conducting the roll call, Max von Holweg.
I'm here.
Alfonso Carney.
He's here.
Adam Freed. Selvin Southwell.
Present.
James McSpirit.
Here.
We have a quorum.
Thanks very much. Important meeting today, but the first order of business, as always, is a resolution to ask for a resolution to approve the minutes of our last meeting, which was on June 3rd, earlier this year. I'd ask for a motion to approve that resolution.
So moved, Mr. Chairman.
Second?
Second.
Thank you. Drafts of the proposed resolution and drafts of the minutes of that meeting are included in everyone's package. I hope everyone's had a chance to review that. Are there any comments or corrections to those minutes? Hearing none, I'd like to call for a vote. Mr. Southwell? Approved. Mr. Carney?
Approved.
Mr. McSpirit?
Approved.
And Adam's not here, right? I vote in favor of the resolution. It's hereby approved. Now the main event today is a presentation by management and the independent auditors regarding their audited financial statements for the system, which is comprised of the Finance Authority and the Water Board. For fiscal year 2024, I'd like to turn this over to Raymond Lee, the authority's comptroller, and also to representatives of Grant Thornton. Nick, take it away.
Thank you, Mr. Chair. So before getting through some of the financial highlights, I want to note that the Water Finance Authority has successfully implemented its new accounting system this year. We went through the entire close and the audit only using the new system, didn't have to go back to the old system at all, so I'd call that a pretty good success.
I'd say so.
All right, so now going to some of the financial highlights for the
Sure.
All right, so going to the financial highlights for the fiscal 24 results of the water and sewer system. So on the operating revenue side, water and sewer operating revenues increased by $59 million, resulting primarily from a 4.42% rate increase for fiscal year 24, as well as higher past due customer balances contributing to higher late payment fees. This was offset by a decrease in water consumption in the first half of fiscal year 2024, as well as higher bad debt expense resulting from an increase in allowance for uncollectible receivables. So while the higher past due balances contributed to higher late payment fees, it also contributed to higher balances in the uncollected amount as a result. Non-operating revenues increased by $39 million, and this was primarily due to an increase in investment income, which was $76 million higher in fiscal 24 compared to fiscal 23. This was largely due to an increase in the investment income from higher yields and higher investable balances during the fiscal year. As a result of this activity, the overall revenue for the system increased by $98 million. From the expense side, operations and maintenance expenses increased by $243 million compared to the prior year. This was primarily due to the $145 million rental payment that the system made to the city, increases in personal service costs due to collective bargaining increases, and increase in the rate used to calculate fringe benefits, higher water and wastewater treatment chemical costs, and investments in management information systems and cybersecurity measures. Other operating expenses decreased by $30 million, and this was primarily due to a decrease in program expenses and expenses related to the system's filtration avoidance termination. And program expenses here refers to things like the assistance programs and the forgiveness programs. On the balance sheet, in terms of debt activity, the authority issued $2.85 billion in bonds published this year. Of that, $1.08 billion was new money bonds, and $1.76 billion was used for refunding. As part of the refunding, New York Water also terminated $401 million in swaps associated with 2008 Series BV bonds, paying $19 million to terminate the agreement. As a result of that termination, the system is no longer carrying swap liability and the related deferrals from that swap agreement. The refunding generated a present value savings of about $224 million for the year. as part of the construction costs, city construction costs, the authority reimbursed the city $1.58 billion for the year. Going to other assets and liability activity, long-term liabilities increased by $601 million, and this was primarily as a result of the debt activity previously noted. Current liabilities decreased by $138 million, and that's just a function of the year-over-year portion of bonds payable due in 1 year at balance sheet date. In terms of receivables, the water and sewer receivables net allowance on collectibles increased by $82 million. Restricted cash, cash equivalents, and investments increased by $97 million. And total capital assets, net of depreciation, increased by $568 million. That was primarily due to additions to construction work in progress of $272 million and additions to the assets in service of $1.26 billion, but that's offset by $968 million of depreciation. Overall, the system debt position increased by $754 million as a result of all the activity that was noted. Before I throw it over to the auditors for their presentation, did anyone have any questions?
None here.
No. Nick?
Great.
Take it away.
So we are going to go through our formal results presentation. And so for the committees, the joint committee's benefit, what we're going to do is we're going to talk about our responsibilities under the engagement. What we're going to do also is reinforce what our significant risks and areas of focus were for the audit, which is what we presented to the joint audit committee before we started the audit and the results of those procedures. And then we will formally discharge our responsibilities as your external auditor through our required communications. So if everybody can turn to the first page titled Our Responsibilities. So we performed an audit of the combining financial statements for the year ended June 30th, 2024. As part of our responsibilities, we render an opinion on those combining financial statements. And the opinion that's included in the draft financial statements that were part of this package is an unmodified or clean opinion. We are also required to read the required supplementary information and MD&A in its entirety to ensure it's materially consistent with the books and records, general ledger, and ultimately the compilation of the financial statements in accordance with the procedures that we performed. During the course of the audit, we are also required to disclose to the joint committee whether or not we've identified any instances of fraud or non-compliance, and I'm happy to report that we did not. Furthermore, if during the course of our audit we identified any material weaknesses or significant deficiencies in internal controls over financial reporting or on compliance, we would be required to disclose those findings in writing in an internal control letter, which will be part of this package that we would have to explicitly discuss with you. Fortunately, you'll notice that there is no internal control letter because we did not identify such deficiencies as part of our audit procedure. So with that, now I'm going to turn it over to my manager, Christian, and Christian's just going to walk the committee through what our areas of focus were. So, Christian?
Cover this one.
No.
Okay, so for the first significant risk I'll talk about is the management override of internal controls. This is the presumed fraud risk that's significant in all engagements. It's not something that's specific just to the water system.
That's page 3 on the bottom right.
Got it.
Thank you.
Thanks.
So what we do is we consider the design and implementation of entity-level controls, and we assess the system's ability to segregate duties in the financial reporting process. To address this risk, some of our procedures include conducting interviews with personnel in the financial reporting process. We'll inquire if they have any knowledge on fraud or of any material misstatements, or if they've been requested to make any unusual journal entries. Happy to say the answer to all those were no with everyone we discussed. We also perform risk assessment in our journal entry testing. We actually have this tool called Whole Ledger Analytics. We're able to upload all the journal entries posted to the GL during the year. The software analyzes all of the data and identifies all the high-risk entries for us to test. So it lets us take a very targeted approach to our journal entry testing rather than just randomly sampling journal entries throughout the year.
That's some pretty amazing software.
It really is. It helps out a lot.
I bet it does.
Yeah.
How does it define high-risk entries?
So really, it's just volume of transactions. We have to upload a mapped version of it. Yeah.
There's 47 different algorithms built into the tool that are designed to detect specific instances where something would be uncommon or out of whack, if you will. So for instance, we would not want to see certain accounts combined in a journal entry. That would be a flag. So that would get flagged.
Okay.
Certain amounts that are either round numbers or over certain thresholds, that would get flagged. Journal entries posted on holidays or weekends where that's not common, that would get flagged. So these are the types of things that the algorithm builds in. What's wonderful about it is before, we would just do a random sample.
Right.
But as you can imagine, organizations have thousands and thousands of journal entries throughout the year. Doing a sample, are you really getting the full scope of things? There's a lot of sampling risk associated with it. Here, we put the entire general ledger with all of the journal entries in the tool, and it analyzes it instantaneously and then extracts out the journal entries that fit the criteria that I just described. What's also remarkable about the tool is that it significantly reduces the amount of samples that we previously needed to test. Prior to this tool, we would have to go by our sampling methodology and select, call it 40 journal entries to satisfy our sampling methodology. Now, by analyzing the entire general ledger and just identifying those that hit the algorithms, we are able to test usually anywhere from 10 to 15 journal entries, but those are the ones that count. Those are the ones where there really is risk. So sorry to give you a little geeky kind of overall thing, but that's the nature of this tool.
Thank you. Great. So moving on to the next slide, the other significant risk obviously would be the revenue and receivables related to water and sewer revenue. So for this, we perform reasonableness testing on revenue and receivables. We actually perform a pretty substantive analytic over water revenue and sewer revenue, and we actually detail test a sample of revenue transactions, and we actually we test those transactions and agree those amounts to source documentation. So what we also do is also test AR at the end of the year. So we'll perform a detailed test of samples of accounts receivables that are posted to the general ledger at year end and agree those to source documentation as well. We'll analyze the allowance methodology and make sure that that appears reasonable and do an analytic over that as well. And we also make sure all required disclosures related to AR and the methodology are disclosed in the financial statements. Next slide, I'll just highlight a few other areas of our audit focus. First being utility plant and service and construction. So for this, we obtained the 2024 roll forward. We'll agree the beginning balances to the prior year financial statements, and we test the activity throughout the year, including additions and disposals. So we also agree the ending balance to the financial statements and the footnotes, and we do a reasonableness test to make sure depreciation expense for the year is reasonable. No exceptions noted in that testing. So for bonds payable, we'll review any new debt agreements for for new debt in 2024. We also confirm all debt with financial institutions, and we review all debt-related activity for reasonableness. And we also assess the adequacy of the footnote disclosures. We'll read the footnotes and make sure everything is in accordance with the actual debt agreements themselves.
So you actually do that comparison. You look at the footnotes, and then you've read the debt agreement.
Yes.
Okay,
Yeah.
so you literally, in your head, you're doing a comparison and contrast of those things.
Yeah.
Okay.
Yeah. So moving on to expenses, we test a sample of expenses throughout the year for accuracy and recognition and make sure that the expenses are recorded in the proper period. We also perform select testing over select disbursements. We also do a search for unrecorded liabilities test, which is we'll take a sample of disbursements after year end and make sure that there was no missed liabilities that should have been recorded as of 6/30. No exceptions noted in that testing as well. And for our investments, we confirm all balances with financial institutions. We analyze and test the reasonableness of the investment-related income. We do a fair market value test to make sure we're comfortable with any unrealized appreciation or depreciation throughout the year, and we make sure all required disclosures are included in the financial statements. No acceptance noted in that testing as well. And just to touch on the technology support as part of the audit process, we have our IT team help assess IT risks and IT-related controls, and they found no significant deficiencies or any material weaknesses in the audit this year.
And it's just important to mention as well, I know Raymond mentioned it, but obviously we have a new accounting software. So we've been working with management, not only this year, but prior years as well, to ensure that the data conversion was appropriate, that we had everything that we needed to from a controls perspective moving into this audit. And so it wasn't your typical ho-hum information technology review. Obviously, we were looking at a new system, and again, just want to reiterate, no material weaknesses or significant deficiencies. And my comments when I opened up regarding our responsibilities, that would include the results of the IT portion of the audit, because we are one comprehensive team. Now, turning to page 7 of our presentation, these are our formal required communications to discharge our responsibilities as your external auditor. I touched upon some of these already, but just in the matter of just being complete, I will go through each of them one more time. So during the course of the audit, we did not note any going concern matters, nor did we identify any fraud or non-compliance. We did not identify any material weaknesses or significant deficiencies. The use of other auditors and internal audit is not applicable to this engagement, and related party transactions were reviewed to ensure that they were occurring at arm's length and that we have the appropriate disclosures in the combining financial statements, and we don't have any exceptions regarding that. There were no unusual transactions that required additional time on our end to try to figure out with management, nor did we have any disagreements with management throughout the process. And it's important for me to point out at this stage in the game that we had the full cooperation of management from the very beginning of the audit process. So we really appreciate management's preparedness, their demonstration of the command of the books and records. All of our questions were answered timely. All of our requests were provided timely, which has enabled us to meet all deadlines on time and on budget. We are not aware of any consultation with any other accountants as part of this engagement, and there were no significant issues discussed with management that prevented us from getting to this point today. There are no other findings or matters that we would be required to disclose to the Joint Committee as your external auditors. And then finally, if the financial statements, which include our auditor's opinion, were to be in any other public document, we would be required to review that document in its entirety to ensure it's materially consistent with the financial statements and the opinion that we've rendered. Does anyone have any questions with regards to our required communications?
Yes, I actually did. The use of internal audit, what exactly is the disclosure? Is there not internal audit, or internal audit is handled internally here?
There is not internal audit for this engagement, so we did not obviously utilize them. Now, if there was an internal audit department, we are permitted under the auditing standards to either leverage some of the work of that internal audit department or actually include them as part of our engagement team and supervise them as if they were audit staff. And if we did that, we would be required to disclose that to you.
Okay. And then my second question, because I'm new on the board, it's a new engagement, but is this it's a new contract? Is it a new engagement as well? Is this a switch in auditors this year?
No.
Okay.
It's a 3-year engagement, I believe.
Right.
Isn't that right?
Correct, yes.
Yes. I think it's important just to get into the record that while you have expressed a view regarding weaknesses in internal controls, it is only with regard to those matters that you reviewed as a part of the audit. You're not here, nor do you engage in a review of the internal controls. Soup to nuts. Okay.
That is absolutely correct. So This is commenting on the areas of audit focus that could potentially lead to material misstatement in terms of financial reporting. It does not cover every aspect of the controls of the operations of the combining financial statements.
Thank you.
If there are no other questions, then that concludes our formal presentation.
Well, I, for one, would like to commend the whole team, the authority, Raymond, and the work that you guys have done. Another clean audit, no outstanding problems. So I think everyone needs to be congratulated for that work, mostly our management team.
I'd like to congratulate all the staff also. We've been a little short-staffed this year, and getting through this audit was a bit more difficult this year.
Well, it was a change in systems too.
Changing systems also was created some challenges. I think the new system, hopefully, going down the line a bit more intuitive than the old system. So,
Is the staff shortage, obviously it's affected your ability to go home on time. But how is that, what do you expect to have happen over the course of the next 6 months? Will you be able to staff up again?
yeah, we will. The staff shortage is mostly due to unforeseen
Departures?
Unforeseen leave by one of the staff. So we are hiring soon to make up for that. So we'll have a pretty robust team, especially when the staff on leave come back.
Thanks, Rick. Thank you.
Well, our official action in this regard requires the adoption of a resolution recommending to the authority's board of directors and the water board to accept the independent auditor's report on the financial statements for these years ended June 30, 2024 and June 30, 2023, and the issuance of those financial statements. Could I entertain a motion to that effect? So moved. And a second?
Second?
I will note that the resolution will note that the audited financial statements may be amended to reflect non-material changes that are acceptable to the comptroller of the authority. There are any additional comments or questions. I'd ask for a vote on that resolution. Mr. Southwell, you vote. Mr. Carney?
To approve.
Mr. Freed? Approve. Mr. McSpirit? Approve. And I too approve. The resolution is hereby approved. Thanks very much for all your work and all your work. The next item on our agenda is a review item, and that's a review of our internal controls, procedures, and policies manual. And a draft of that manual has been circulated, as well as a red line draft showing the changes. The Water Board's treasurers, Omar, and the Water Authority's Executive Director, Phil, are available to answer any questions. So I would ask if anyone has any such questions. Hearing none?
Well, I was just going to say, in reading through the redlining, most of it just seemed to be rewording or clarifying and updating to terminology rather than any substantive changes.
Yeah.
Want to just proactively confirm that is correct, and I didn't miss anything that was a material change for our
With
control.
respect to the board's policy, that's correct.
Okay.
We tried to just clarify the delineation of the treasurer and debt.
Exactly.
The IT ops, they were not significant changes.
On the water finance side, there's also some cleanup to reflect the current practices, particularly due to the new accounting system.
Yeah, that's what it all
Yeah.
seemed much more pro forma of catching up to what you're doing rather than substantially changing how you're doing it.
Yeah, I think that was my read of it as well, and I thought a lot of it was related to the change in the system too. As I said, that's a review item. No vote is required. The next item on the agenda is a resolution that would approve our Joint Audit Committee charter. We're required every year to review and approve our charter. No changes are proposed. If there are no comments or questions about that, I'd like to entertain a resolution to approve our charter.
So moved.
And a second. Second. Is there any comments or questions? Hearing none, I'll call for a vote. Mr. Southwell? To approve. Thank you. Mr. Carney?
To approve.
Mr. Freed?
Approve.
And Mr. McSpirit?
Approved.
And I too approve. That resolution is approved. The next item is a review item, and that is a review of our audit committee scheduled dates. You'll see that this provides information on the items to be discussed at the annual meetings of the Joint Audit Committee. Same changes made to the Audit Committee charter have been made to the schedule of dates. It's been circulated for everybody's review, and that is also a review item, so no vote is required. I believe that's the last item on our agenda, so I would then entertain a motion to adjourn.
Is the schedule changed, or this just reflects current practice?
Current practice.
Current practice, which has been practiced for a while.
Yes.
Yes.
Motion to adjourn?
So moved.
Second. Mr. Southwell, how do you vote? Mr. Carney?
To adjourn.
Mr. Freed?
Aye.
Mr. McSpirit?
Aye.
And I too vote in favor of adjournment. Meeting is hereby adjourned.
Thank you.
Thank you.